Okay, let's get started. Hey everyone, my name is Matthew Wilson. I am the founder of Life Matters. We're going to talk about one of the most important and exciting topics, insurance, right? Yay! You're like, all right, insurance, okay, that's great. No, insurance, this really is exciting. Bear with me, this is 15 or 20 minutes at the most. I'm going to show you what I'm calling the fully loaded policy. Now, this is what it's about. Let me give you just a recap. Maybe you just purchased a home, maybe you have a spouse, kids, something, you're looking ahead at the next 30, 40 years. This is life insurance, but it's life insurance on steroids because I'm going to show you how to protect your home mortgage, how to protect your family against anything that life can throw at you. Okay, over the next 25, 30 years, we're going to protect everything, and we're going to do it for a net zero cost. Okay, a net zero cost. You're going to come out at the end of 30 years, zero cost in net. So let's go through this. So I have to make some assumptions. Okay, and the first assumption that I'm going to make is that this is a $300,000 mortgage. So you have a mortgage. It's $300,000, and there's a lot of ways that you can protect that mortgage in a life insurance policy, which is called mortgage protection. Okay, and you can protect it with different amounts of it. You can do it for 20 years or 30 years. You can do it with a whole policy, a permanent or a term policy. Either way, there's a lot of different ways, but for this policy, what we're talking about right here is a 30-year mortgage, but we're going to talk about a 25-year, policy on a 30-year mortgage. And I'm going to explain why in a second. So this is you, okay? And here's your mortgage. You've got from here to here is 30 years, right? Most people do a 30-year fixed mortgage. And you have, let's say, a spouse and some little kids. Who knows? Maybe not. But your goal, you want to have these people protected over the next 30 years against anything that life could throw at you. Like if you're the breadwinner and you bring home the bacon, these people are depending on you for that. You want to make sure if something happens to you that they will be well taken care of. Okay, that's the first and foremost goal. And we're going to do that because life has a way of, raining on your parade, so to speak, anywhere along the way. I mean, you have no guarantees of tomorrow, next week, next month, anything. You could get hit by a bus. You could contract cancer. You could, have a layoff or something. Any kind of number of things can happen, and you would be out of luck. So you want to have a policy, whether it's this one or another one. You want to have something in place. Mortgage protection insurance is what it's called. That's my specialty. And you want it to do that. Now, what we're going to talk about here is a policy that goes until 25 years, and we're going to talk about that little gap right there as well, because that's 5 years short of your 30-year mortgage. Now, the other assumptions we're going to make, we're going to assume that you're 40 years old, that you're a male, and that your spouse is 38 and female, okay, and that you're both relatively healthy. Okay, now maybe you're single, maybe you're older, maybe you're younger. Don't worry about that all right now. Just look at the principles behind this. I had to pick something, so that's what I picked. This person and this person are going to take out a policy, a life insurance policy on their lives should something happen to them, okay? Now, the 40-year-old male has a policy of $250, okay, and the 40-year-old female has a policy of $100,000. Or the 38-year-old female, I'm sorry. 38, 40, 250, 100,000. Now the premiums for those are like this. 184 and 75. And change. There's change, I'm just rounding them off. Okay, those are the premiums. Now, you're probably looking at that going $184 a month for a $250,000 life insurance is high. And you would be right, because we're not comparing this to standard life insurance. Maybe you have a life insurance policy, and maybe you're only paying $30 or $40 a month, and that's fantastic. There's all different kinds of reasons why a life insurance policy can be anywhere on the spectrum. Do not compare that with this, because this is a fully loaded policy. This has tons and tons of benefits, including the ability for you to pay off your home in 25 years rather than in 30 years. I'll show you how this works. All for a net zero cost. Remember that. Net zero cost. So, is it worth it? You'll have to decide. So 184 plus 75, we're going to add those up together and we get 259. That's what your family is paying out every month during these 25 years. That 259, however, comes out to 77,000 over 25 years. 77,898. Okay, $77,898. Why is that important? Because that's the size of the check that you are going to get back at the end of 25 years. So during the process, if something happens to you and you die, there's a payout. If nothing happens to you, which is the more likely scenario, and you live over the next 25 years, there is still a payout. With a lot of life insurance agencies, there is no payout. You outlive the policy, which is likely to happen. You get no money back. It was a rented policy, and it's gone. Okay? With this policy, you're going to get that money back. Why is that significant? Watch this. I've already done the math. In 25 years, 300,000 at 4%-ish, give or take. 4% rate, which is a standard rate. In 25 years, guess how much you still owe on your mortgage? That's right. You owe $77,000. So you write a 25-year policy. You get a check back for $77,000. Guess what you can then do? You can write a check. You can pass that along to your mortgage company. Pay off your home 5 years early. Okay? All through the process, you're just making your regular mortgage payment. But by doing this, you can write your mortgage, or you can finish your mortgage 5 years early. Now, what happens during the process? So during those 25 years, okay, you have a death benefit. A death benefit is this right here. You're going to pay for that anyways, whether it's this insurance or another company. You're going to pay for a death benefit if you have any insurance at all. That's going to be a cost out of pocket. You're going to have living benefits. Haven't even talked about those yet, but what if something happens to you and you don't die? What if you got cancer, you had a heart attack, a stroke, a major organ transplant, if you had a terminal illness, a chronic illness, any kind of a critical illness? There's a whole list that would keep you from being able to go to work, or that would keep you from being able to make ends meet because you have tons and tons of medical bills. Your health insurance only goes so far. Well, living benefits allows you to draw money from these amounts from your death benefit. It allows you to accelerate your death benefit for those qualifying events. So those are called living benefits. Because unless you die, your life insurance policy will never pay out. It's not going to pay unless they see a death certificate. So a living benefit helps you if you don't die. Okay? So you're covered if you die. You're covered if you don't die. But what if you're healthy and you live all the way through, like I mentioned before? You're covered again. So they're going to pay you no matter what. Okay? And that's why there's a bit of a premium here. This is $259. It is not inexpensive life insurance. This is not for everybody. Not everybody qualifies for it either. But if you do, you get a heck of a lot of benefits, and you get all that money back. So everything you've been paying out, you get it all back for a net zero cost. What else do you get? A 25% accidental death benefit, which means if you die by an accident, that 1 to 100 is 125, or that 250 is what, 300, I think. You get a 25% increase on your death benefit if you pass away by accident. So you have that built in. The other thing to keep in mind is, hold on, I was just going to check something here. There's our additional riders. There's child's income rider, there's a disability income rider, there's a return of premium rider, and an income term rider. So these are riders are just enhancements that you can add into the policy. So you can enhance your policy with a whole bunch of different riders. Okay, it'll look like that. So you have that, and then you also save. Guess what? See that? That's 20. That's 5 years. Guess how much interest you're paying? 5 years on your mortgage, $33,000 that you will save You're going to save $33,000 worth of interest in those payments that you're not making because you paid off your home 5 years earlier. Okay? So you can start to see how this adds up, and you can start to see why I call this a fully loaded policy. Okay? Now you're probably looking for, if you're like most people, you're looking for, hey, I've got life insurance, I want to pay as little as possible, and I want to just cover myself and be protected, and that's great. And I have policies like that, and we can write policies like that very inexpensively. And then if you're like a lot of people, I want to pay off my mortgage early, so I'm going to put more money towards my mortgage every month. Or I'm going to put money towards an investment account. Why? Because I want to be able to own my home free and clear one day. Or any number of different things. Maybe it's a different enhancements to policies. Maybe there's some benefits for children or spouses that you're paying extra on. Well, guess what? This has everything. So if you combine those different places where you're spending money and you just get one decent sized policy, and it's not phenomenal, $184 a month, $75 a month, that is more expensive than the average policy, but it's not out of the world. But it includes so many other things that people spend money on. Like even if you're paying an extra $100 a month on your mortgage, and you're paying $84 on your policy, well, just combining those two does this, gets you all these benefits and guarantees that you're going to pay that off 5 years faster at a net zero cost. So is it worth it? You'll have to decide. But maybe you're looking at this going, well, I'm not 40 years old. Maybe my mortgage isn't $300,000. Maybe I'm not perfect health or whatever. That's great. There's all kinds of different qualifiers. There's all kinds of different moving parts. And as a licensed agent, I had to, of course, make some assumptions in order to run this illustration. But here's what we do next. There is somewhere, up, down, I don't know where it is, but there is a form for you to fill out for me to contact you. Okay, you're not going to get contacted by some guy overseas or some sales guy or anything like that. This is me. I will call you. I live here in Arizona. I am not a fly-by-night agent. I've been writing policies in Arizona for a long time, and I'm licensed here in the state, and I run appointments all over the valley, Maricopa and Pinal counties. I sit down with people and show them how these numbers work specifically in your situation. Because maybe you're 43, or maybe your home mortgage is only $250, or whatever. We just move the numbers around. We still accomplish the same goal, which is paying off your home 5 years earlier, and a net zero cost of not being able, or not having to make any out of pocket at the end of the day, at the end of 25 years, because you get all that money back. So a net zero cost. So all those principles still work, regardless of your different individual situation. Huge savings right here. Don't forget, $33,000 of interest that you're going to save by paying your home off earlier. So, fully loaded policy. You probably have some questions. What I'm going to do is pause the presentation for a minute because I see some of these questions coming in, and I just want to ask a few of them. I've got time for just a few, and then I got to wrap up because I promised we'd be about 15 or 20 minutes at the most. So the first question, what if I don't stay in my home all 30 years? That's a great question. So let's say, here you're going to move. Well, guess what? This policy you own outright. This isn't connected with your mortgage. It goes with you from home to home and from loan to loan. Wherever you go, this policy is on you and your lives. So it still applies regardless of what situation. So yeah, it doesn't change anything here if you don't stay in the home all 30 years. If you have other plans besides this one, yes, I do have other plans besides this one. I'm an independent agent. I work with 8 or 10 different carriers. I price shop around for my clients. I write a lot of mortgage protection, but I also do some final expense, some funeral type of policies, end of life stuff, all kinds of different things. This just happens to be a home run policy that I was really excited about, this whole strategy, because life insurance has evolved over the years, but a lot of people don't realize the cool things you can do with your life insurance nowadays. It's not just a policy or a thing where somebody dies, somebody else gets paid. There's living benefits, there's death benefits, there's riders, different attachments you can do. There's this option, this cashback option that pays you out. There's all kinds of different benefits built into these policies that you can really take advantage of. A lot of people don't realize are available. So I do have other plans. I just really love this one, but I have different plans for different situations in life. Great question. How hard is it to qualify? Okay, so Do you have to be in perfect health? No, you don't. That's the good news. You can have issues, relatively minor. If you're just in a huge screening with cancer or something right now, then you're not going to qualify. But there are smaller things that really don't matter that much. That a lot of people are on some medications here and there. The best thing is for me just to sit down and look at your situation, and I can tell you with pretty good degree of accuracy whether or not you'll qualify. The qualification is very brief. It doesn't take very long. We sit down, we do a 20-minute application. Sometimes we know right on the spot. The carrier will let us know right away. But other times it takes 3 or 4 days to hear back. So it's very brief and a quick process for qualifying. And it isn't that tough. Most people, if they're relatively healthy, would qualify. Question: do you have to have a medical test? Okay, I love this question because this is a distinction that confuses a lot of people. In standard life insurance, a lot of times they will send out a nurse to draw blood, take a urine sample, and it draws out the process. It takes about 6 or 8 weeks, and a lot of times the insurance companies will find things in your blood work, and they'll rate the policy up so it will go a lot more expensive than you thought it was. This is called a medical process, a medical application process. And so what we're doing here is a non-medical process. So no, there is no nurse that comes out, there is no blood that is drawn, okay? And that's important to note, because if that does happen, if you go through an insurance process and you have blood work done, you may not know, but there's a database that gets created on you and reported into the MIB. You can check it out at MIB.com. It's a Medical Information Bureau. And that database is now available to all the insurance companies, so you can actually make yourself not uninsurable, because they can find things you didn't know you had. So it's very risky. If you're very healthy, you can save a little bit of money going full medical process, but you're much better off avoiding that risk, leaving the risk on the shoulders of the insurance companies and going non-medical like we're doing here. So this is private. Your information doesn't go to the MIB. It stays private. It's a very simple application process, and it only takes a few days, like I said. I'll take one more, and then I got to wrap up. What if I'm paying off my home faster than 30 years? Maybe your goal is to pay it off in 20 because you're doing it bi-monthly instead of monthly, or bi-weekly, or whatever that program is. You've probably heard of it. That's fine. We'll just cater this. We'll, instead of doing a 25-year policy, we'll do a 15-year policy or a 20-year policy. And we'll just, maybe that 5 years that we shed off is, instead of from 25 to 30, it's from 20 to 25, or whatever the case may be. We can still shave off time from what your current plan is by doing a policy like this and lining up the numbers so that you get paid out about the time that you owe that same amount of money to pay off your home 5 years sooner than you were even planning. So phenomenal benefit. Again, this whole thing works really, really well. A lot of people are taking advantage of it because it's newer, it's out on the market now, and it's stuff that a lot of people don't know even exists. So I'm here educating. Now, my role as an insurance agent is just that. I'm a field underwriter. I am not a salesman. I'm not very good at sales. If you and I meet, if you call me, if you fill out the form, you're going to hear directly from me, not one of my assistants. You'll hear directly from me. We can ask questions. But what I would do is set up a time for you and I to meet personally in your home. Now, the state requires face-to-face on these, so I have to verify you're not in a hospital bed or something. So I come out to your home, we meet face-to-face. I get all of your questions answered. And I just show you how this illustration works for you, and that's it. You can decide what you want to do with the information, or if you want to move forward. If you do want to put in an application, it just takes about 10 or 15 minutes. We do it right there in the home, and then in a matter of a few days. No nurse, like I said, or anything like that. So if you're at all interested in learning more about how this might work for you, or somebody that you know, fill out the form, give me your contact information. I'll be in touch within the next few days to a week. We'll set something up. I'll drive out, and we'll go over this and see how this works for you. Thank you so much for listening. Hope you have a wonderful day. And whatever you do, whether it's this policy or another, make sure you've protected your home and family. Because I've seen way too many examples of people not doing it, and it messes up all those who are their survivors. You see those people on the side of the road, the car wash signs or a GoFundMe stuff, and that's just because somebody didn't have a really good plan in place. So don't want that to happen to you. Anyways, I hope you got this. I look forward to hearing from you. Take care.